what I'd like to do is present the investment case, the supply and the demand dynamics around cobalt, which, as I've taken to calling it, is lithium's little brother. Okay, for the last couple of years, we've heard all about lithium and all about its uses, and we just saw a great presentation about the demand, and so I want to just try and put a little perspective around cobalt, some of the opportunities and some of the risks, and put that in context. Again, a little bit about myself. I've been doing this since about 2010, based in New York, and very passionate and very excited about not just copper and cobalt and lithium, but some of the other niche metals as well. And so these are the types of stories and opportunities that I put in front of clientele of mine. Okay, so just to start, okay, why is everybody excited? Okay, again, we've heard the lithium story, we've heard copper. What is it about cobalt that has it on the front page of every newspaper and on the tip of every exploration and production company's tongue? Well, obviously, you know, the cobalt price, I think, is indicative of what's going on. What we're looking at here is the London Metal Exchange, the LME futures contract. This is for the high-grade metal, and as you can see, just in the last 18 months or so, it's increased by 144%. Okay, and it should come as no surprise to you as to why. It's obviously all around excitement around vehicle electrification, and of course, energy storage, and the whole idea of cost deflation around these technologies, something that I'll talk about really driving cobalt demand here going forward. And I think one of the things to keep in mind, especially when you start talking and examining these niche metals, these minor metals like lithium and in particular like cobalt, is that they are prone to cycles just like every other commodity, whether or not it's a hard commodity, a soft commodity, or a liquid commodity. My own personal opinion, and what I want to do is just take sort of a step back to talk a little bit about cobalt and, again, position it appropriately. But my own personal opinion is that the current cycle for these energy metals, as I call them, began about 3 years ago in February of 2014. And what happened then, some of you may remember, that was when Elon Musk announced plans for the Gigafactory in Nevada in the United States. And people started, they listened to him and listened to what he said about 500,000 and ultimately 1 million battery packs coming out of that factory by 2020, and they started sharpening their pencils and saying, wow, this is going to really ramp lithium and cobalt demand in particular. And of course, since then, you've seen basically every major and minor automotive manufacturer in Germany, in China, and the United States come out with their own plans for Gigafactory type projects as well. So very, very robust demand scenario going forward, and that is, of course, why the cobalt price in particular has rocketed much higher. And so, you know, again, just looking back over the last 3 years since this cycle began, this gets away from cobalt a little bit, but I'll bring it back here in a second. When I was analyzing this energy metal space in February of 2014, I was actively tracking about 16 publicly traded exploration and development companies. Most of them were lithium. There might have been 1 or 2 cobalt at that point in time. And as you can see, now in 2017, we've got over 200. And I would say about 175 of them are in the lithium space. They're publicly traded in Australia and Canada and markets like that. Maybe 20 to 25 are cobalt. And of course, I'm ignoring graphite just for the purpose of this conversation. But I think one of the really exciting things and one of the really powerful elements of around this boom with respect to the energy metals and with respect to cobalt is that it's rooted in economics. Okay, it's not just about subsidies or anything like that. In particular, when you look at the price of a lithium-ion battery, as you can see here, it's fallen by about 60% in terms of dollars per kilowatt hour just in the last 3 years alone. And then if you take that back and you look at over the last 8 years, it's fallen by about 90%. So this is that positive deflation, that technological deflation that I mentioned before. The idea, of course, becomes as the lithium-ion battery becomes cheaper, it becomes ubiquitous, and all of a sudden, economics around an electric vehicle start to compete and beat the internal combustion engine. And that's what I think, and probably Daniela thinks as well, out over the next 5 to 10 years. And speaking of electric vehicle sales, as you can see, they've doubled just in the last 3 years, again, just since Elon Musk had announced his Gigafactory. And to put that in perspective, it took 20 years for the first million electric vehicles to be sold globally. And when I say electric vehicles, I mean plug-ins and hybrids, basically anything with a battery. It took 18 months for the next million electric vehicles to be sold, to the point where last year I think sales were 700,000 or 800,000 globally, driven predominantly by China. So when you think about that and you think about that pace of growth, again, it really puts a wind in the sails of the cobalt and the lithium stories. And again, Daniela mentioned this before. I won't belabor the point, but you've got France, the UK, the Netherlands, and of course, most notably China, all committing, at least on paper, to phase out sales of internal combustion engine cars by a specific date. In Europe, it looks like it's going to be 2040, but the whisper number in China is 2030, 10 years sooner. And that's, of course, particularly significant because China is, of course, the largest automotive market in the world right now, behind the United States. And even yesterday, as I was flying down here, I saw an article where the governor of California wants to outlaw internal combustion engine sales in his state by 2030. So, you know, we're not really sure how much of this is talk and how much of this is actually going to happen. But again, I really think it's the economics behind the batteries that are really pushing this forward. And just to hammer that home, when we talk about the batteries, I shouldn't use the words battery and explode in the same slide, but nevertheless, battery capacity is going to ramp up dramatically in the next 5 to 7 years. According to Benchmark Mineral Intelligence, and numbers that I have also put together, there are about 28 gigawatt hours of lithium-ion battery capacity in 2016. That is going to ramp by a factor of more than 5 to 174 gigawatt hours just by 2020. And then depending upon whose forecast you look at and follow, it will probably double again to over 400 gigawatt hours by 2025. And this is just some data on who the main culprits are and where. So again, if you just think about the whole idea of scale and technology pushing prices down, we're sort of on the precipice here of this huge wave or flood of battery capacity about to hit the market. So prices, in my opinion, lithium-ion battery prices only have one way to go, and that's down. And again, that really underpins, I think, strong lithium and cobalt and graphite prices out over the next, say, 5 to 7 years. Okay, so focusing for the remainder of the presentation here on cobalt, whether or not you're an investor, whether or not you are involved in cobalt exploration or development, I think that there are really 3 major questions that you want to be asking yourself right now. First of all, again, based on the numbers that I've shown you, based on the numbers that Daniela has shown you, will there be enough cobalt, enough battery-grade cobalt chemicals available to handle what really is unprecedented electric vehicle demand? The numbers that I have seen show EV demand growing out to 2025 at least by about 40% per year. Okay, now that's obviously off of a very low base. Okay, we're not talking about an installed base of tens of millions of cars already, but nevertheless, you know, my argument or my answer to the first question would be no. No, there is not. And I'll talk about some of the challenges why there's a cobalt pinch we're experiencing right now and probably set to continue to see out over the next couple of years. It has everything to do with where cobalt is mined in the Democratic Republic of Congo, and of course the fact that about 96% of cobalt is mined as a byproduct, of course, of copper and nickel. So we'll talk about that in just a couple of minutes. Then, of course, dovetailing on that, will the Democratic Republic of the Congo become more or less important in the cobalt supply chain? My argument is that you're going to see supply, demand and supply, I should say, for cobalt from the DRC actually increase, despite all the concerns around artisanal mining and child mining and things that, you know, should not be happening. There, again, just is not enough cobalt above ground or available to handle the potential EV demand out over the next 5 years. And when you look at the deposits in the DRC, they're just too big and too high grade to ignore. So the DRC is going to continue to be a very powerful force in cobalt. And then finally, and this is the one that's really probably the hardest to predict, will battery chemistry or battery technology move away from cobalt-based cathodes? The answer to that one is that they already are. You have about maybe 6 or 7 or 8 lithium-ion battery chemistries. And I would say of the 8, 6 of them use cobalt. And the other 2 that do not, that are used in the automotive business right now in China, are looking at cobalt-based cathodes. So everything is moving more towards cobalt in the batteries. And I think ultimately what will happen here, again, because of supply constraints and pricing pressures, is you'll see the battery scientists and the chemists figure out ways to use less cobalt per battery, okay? And I have some data that I can show you here. But they'll ultimately end up using more cobalt overall. So, you're going to have to see a supply response and probably recycling also come into play here as well. So these are just some of the 3 major issues, I think, on everyone's mind right now. A little bit of background about cobalt for those of you who aren't that familiar with it or where it comes from. Again, as I had mentioned before, the U.S. Geological Service says that about last year, 54% of cobalt production, cobalt mined cobalt, I should say, came from the DRC. My personal numbers have it a little bit higher than that, 60 to 62%. Again, because of the artisanal mining, no one's really sure how much is coming through the cobalt in that supply chain, or coming through that supply chain, I should say. And of course, down below you can see I just have listed the major cobalt producing countries, and not just their 2016 production, but of course the percentage of the total reserves that they have. And you can see that no one comes, oops, hit the wrong one. Go back, there we go. No one comes close to the DRC. They have about 50% of global reserves. So again, if this whole vehicle electrification and energy storage thesis plays out over the next 5 to 10 to 15 years, which I think it will, the DRC is going to have to be a major factor. With respect to the players, the companies in the cobalt space, I had this slide put together, and it's actually changed a little bit since I had originally put it together a while ago. You've really got an oligopoly here. Cobalt is not unlike lithium in that respect. You've got 4 cobalt mining companies, or 4 companies who mine cobalt, and they're responsible for almost half of global supply. And I mentioned before some of the things that had changed on this slide. Glencore in 2016, you can see it had 20,600 tons. They actually ramped that up to 28,000 tons. So if you're a junior miner and you're looking at getting involved in cobalt, this is who you're going to compete against. You're going to compete against a company like Glencore that has a huge mining network and, of course, a trading network. And then going down the line, Freeport-McMoRan, ERC, and Huayu Cobalt. And of course, Freeport-McMoRan is not in the cobalt game anymore. They sold their share of their Tenke mine, the copper cobalt mine in the DRC, to China Molybdenum. So I guess another way to look at this slide is, when we think about commodities, when we think about the metals, China always looms large. Well, now 2 of the top 4 global cobalt mining companies are Chinese, and that's something that's changed just in the last few years. Supply demand out to 2025. Again, it's tough to tell because we know the DRC is going to remain a factor. Right now, the numbers that I have put together based on current supply and demand dynamics, where demand's growing at about 9 or 10% per year, you're looking at about a 10,000 ton deficit of cobalt by 2020. I think that's entirely realistic, and again, that is why you've seen the price, at least on the LME, and for the chemicals, shoot up as well. One important distinction that you want to make when you talk about cobalt is you want to make the distinction between the amount of cobalt that's actually mined and the amount of cobalt chemicals that are produced. They're 2 separate processes. The amount of cobalt that was mined last year was around 100 to 120,000 tons. There were about 90,000 tons, I should say, of cobalt chemicals produced. And you can see the battery business was about 50% of that last year. And so again, just looking at the market, the cobalt market as it exists today, by 2025, you could have a situation where you've got 140,000 tons of cobalt chemical demand, triple the amount that was used last year, and 1.4 times larger than the entire cobalt market. And again, keep in mind that just accounts for the battery business. That ignores growth in superalloys, aerospace, pigments, anything else like that. So, I think from a supply and demand perspective, the takeaway is pretty obvious, right? You either need a huge wave of supply to come on, and come on relatively soon in the next couple of years, or you need to find a way to reduce the use. Either get it out of certain battery chemistries, like I mentioned before, and minimize its use. And so you're going to see a little bit of both happen, actually. Some of the companies that I mentioned before, Glencore, ERC, together are planning on bringing about 40,000 tons of new supply on stream by 2018, 2019. But again, that still won't, push the market into oversupply by any stretch of the imagination. Don't want to get too technical right before lunch, but again, I would be remiss if I didn't at least show you some data around how important cobalt is in various lithium-ion battery chemistries. Going across the top, you can see lithium cobalt oxide, nickel manganese cobalt, and I'll explain these numbers, and then nickel cobalt aluminum. Again, just for the sake of explanation, LCO, as it's called, is the battery chemistry that's used in your cell phone. Okay, and so you can see it's about 42% of the weight of that cathode. But again, because it's such a small amount, you don't really feel it, for lack of a better phrase. The problem becomes when you start manufacturing bigger batteries, whether or not it's for automobiles or buses or what have you. Tesla, for example, uses NCA, nickel cobalt aluminum. You can see that's about 5% of the weight of the battery. What you're going to see in the next few years is basically this huge shift away from NCA, away from everything else, and you're going to start seeing everything focus right here, NMC, nickel manganese cobalt. And I talked about these numbers. These numbers, for those of you that don't know, represent the amount of each metal in the battery. So NMC 811 or 811, as it's called in the battery space, means 8 parts nickel, 1 part manganese, 1 part cobalt. And you can see the differences there. It's only cobalt's only 3% of the weight there versus 11% of the weight for NMC 111, which is predominantly used in the battery space right now. So there's going to be a slow shift towards minimizing, or trying to minimize, I should say, some of the cobalt in the battery chemistries. And so I'll just finish up with risks and opportunities. Some of these I've already hit before, so we don't need to go into too much detail, or we can during the Q&A. To get a real sense for cobalt pricing, I mean, yes, there is some visibility because there's an LME contract, even though that's not for the chemical form, that's for the metal form. You really need to have a view on nickel and copper prices, and in particular, nickel and copper cost curves, because those will tell you everything about looming supply, I should say, for either nickel or copper, which could potentially affect either positively or negatively cobalt supply out on the market over the next couple of years. Again, DRC geopolitics, I mean, I'm not a political scientist, so your guess is as good as mine about how things are going to shake out over there. But nevertheless, the DRC is going to remain a major force in cobalt production for many years to come. I think, the third item here is one of the ones that's hardest to gauge. It's found inventory and supply additions. Again, I'm very comfortable, my own personal models with respect to supply additions. I see a balanced market tipping into undersupply at least to 2020, and then beyond that, I think you sort of reassess on a year-over-year basis. But found inventory is something that has people in the cobalt space worried. There's rumors of anywhere between 5 to 15 or 20,000 tons of above ground cobalt stocks in warehouses. Maybe they're in China, maybe they're in Rotterdam. I mean, no one really knows for sure. But the threat, I guess would be the right way to put it, of inventory just emerging out of the blue, which we've seen happen in China before with other metals, is something you just want to keep in the back of your mind, again, as you're trying to gauge cobalt pricing going forward. Again, battery technology I mentioned before, you're going to see a shift away from cobalt-heavy cathodes to nickel-heavy cathodes. So maybe next year I can come back and give a presentation on nickel as the hot battery metal, because that's going to become a much bigger factor. And then, of course, some of the obvious ones, just keeping an eye on the the electric vehicle subsidy regimes in various countries. When those tend to get pulled away, as they do from time to time in China, what you typically see is sales collapse, and then rebound as everyone sort of settles in on what the economics of the cars actually are. So looking at those subsidy regimes and looking at sales trends, I think, are really keys going forward. And so again, takeaways, cobalt demand, I see it growing at 10% per year out to 2022. Again, that's just because it takes that long for supply to come on stream. And of course, like I mentioned before, these battery manufacturers to really shift chemistries and shift their supply chains. I think one of the appealing things about cobalt is that when you look at a lot of the minor metals, they're dominated by China. Okay, think about rare earths, for example. That is not a market that anybody that I know wants to be involved in right now because the Chinese own the entire supply chain. Cobalt is not a market dominated by the Chinese by any stretch of the imagination, and I think that actually may be an ultimate opportunity for Chile. You know, when I was talking to Ian about this presentation, he had mentioned that there's a fair amount of, an extensive history, I should say, of cobalt mining here in Chile. And so with everything going on with the government accepting tenders to build out lithium-ion supply chains in the country, it makes perfect sense and total sense to try and include cobalt production in country there as well to really integrate and build a self-sufficient supply chain.